Welcome to the Knowledge Series. This is a growing interest that we see from the future ecosystem of the capital markets here in Ethiopia. As FSD, we see this interest growing from day to day. On this current session, we have over 400 attendances registered and 200 plus online attendances on the streaming. The idea is really to allow professionals, intermediaries, and ecosystem players in the future of the capital market system to be able to interact, convene, ask questions, or query the regulators, the decision makers, and the experts. So we dubbed this Investment Banking 101, rightly so, because we are on a startup mode. Dr. Eyob said the other day, Ethiopia is going to be a startup nation. And I love that book, The Startup Nation, about how Israel transformed itself from the dire situation they were in. And I look forward to having Ethiopia as a startup nation. And we have that today. Among talking about investment banking and the social role that this will be playing. So I'll begin by asking the first question. I would direct this to Dr. Brook. So Dr. Brook, given our conversation, the audience interest, and all the hard work you have been doing, and your amazing team that's working behind you to succeed and get this market up and running in Q1, Q2, the question is, what measures and regulations does the Capital Market Authority is putting in place to ensure investment banks starts and operates within ethical and legal bounds, and to protect investors and the stability of the capital market overall? How do you plan to collaborate with the National Bank of Ethiopia to speed this up, and perhaps other stakeholders to ensure the success of the investment banking in the future capital market system? Dr. Brook.
Thanks so much, Ermias. In terms of what we plan to do to make sure that there is a regulatory environment whereby an investment bank, whatever form, either as a spin-off from some sort of a bank subsidiary that will end up being opening, or a brand new institution, XYZ company being established. Ultimately, the way we look at it as the Capital Market Authority is from the points of view of capital market service providers. And there is a reason behind why we created a directive that's so cumbersome for people who are looking at it. But we just wanted to make sure that when you're picking out a service provider license to apply for, we want you to be cognizant of all the other requirements. Even if, for example, you're a broker, but the brokerage license that you wanted to acquire from the Capital Market Authority, but those exhaustive lists of requirements that may not apply to you, but most apply to you, are a fundamental requirement that will be expected across the board. So when we look at the market that is going to transpire in the next year or two, we don't just necessarily only look at how an investment bank needs to be established and what that investment bank necessarily would need to look like outside the realm of all the other service providers, because once the well is poisoned, then the entire market is poisoned. So we just want to we look at this from a point of view that every market service provider, they need to be qualified, they need to be trustworthy, they need to we need to protect the interest of investors, so they need to act in a way that would ensure investor protection. So we look at it from a broader perspective. Investment banks specifically, there are a certain threshold that they need to fulfill. We have a requirement in terms of qualification that we put in the directive. The capital requirement is also a signaling method for us. We're going to start at a very low threshold, if you ask me, but we're going to ratchet it up depending on many different activities that we see in the market. In terms of collaboration, I think it's not only the National Bank of Ethiopia that we're collaborating with. We're collaborating with all the institutions, financial macro institutions that have some sort of an impact in the sector. I'll give you an example. With the National Bank, it's self-evident. We have to work together very closely. They regulate the banking sector. We regulate the securities market. So unless otherwise both institutions work together, this is not going to be be an efficient outcome. And the designers of this proclamation, our proclamation, they purposefully made Capital Market Authority accountable to the Prime Minister's office, purposefully to make sure that we have a legal standing that's robust and equal footing with the central bank, so that what we do in the marketplace will have a resonance. So we work together, and we have a very strong relationship, as you can imagine. But other institutions, for example, ABE, the accounting board is a very important institution that we work with. The Ministry of Finance, of course, and with the Ministry of Finance, for example, we have identified several tax provisions that are not enablers in the new capital market environment that we expect. When you buy a property, it's 15% tax that you're paying. when you want to share your stocks, capital gains, that's 30%. It doesn't require a genius where to put the money. And the reason why some of the hot property market that we're seeing is government inadvertently is guiding capital to not necessarily a productive sector. So we work with everyone very diligently, and of course, we do a lot of consultation with the public as well, and experts like Craig and Isaac, and we get all those inputs to develop this market.
Thank you, Dr. Brook. Investor protection and the market stability at the core of your thinking process. So very well responded. I'm going to take this to Ato Fikadu, the Vice Governor from the National Bank, because given the current financial industry practices, I think it's fair to ask what steps the National Bank is taking to improve monetary policy and create a conducive environment for investment banks to channel fund issuers to functioning capital markets. And how do you plan to balance these efforts with ensuring financial stability and controlling of inflation? You're the chief economist. The question over to you, Ato Fikadu.
Thank you very much, Ermias, for this very nice but important and also difficult question to answer from National Bank of Ethiopia's perspective. As you know, our job is very tough and difficult in the context of Ethiopia, because our mandate is stabilizing macroeconomic, more specifically in price stability, exchange rate stability, and financial sector stability, which are also affected by other activities by the private sector, and also affected by the structural situation of the country. But as a central bank who is mandated to control inflation, stabilize macroeconomic in general, we are trying to work on modernizing our monetary policy. Basically, we are trying to move from quantitative target monetary policy framework to price-based monetary policy framework that is to signal how market mechanism is going to work. That is very important for capital market and financial market development. So this is what we are doing. We are doing to modernize our monetary policy by transforming quantitative targeting into price targeting, so that NBE might use interest rate to signal the market interest rate, which is very important for resource allocation, efficient resource allocation for financial market as well as the whole system in general. In case of the regulation, so also we are part in the regulating of the financial sector, even if this investment banking is directly related to the Capital Market Authority. I mean the regulator will be the Capital Market Authority, but in case commercial banks are going to participate in the investment banking, we are revising our capital business banking business proclamation, where we are considering how exist commercial banks and the coming in commercial banks can participate in the investment banking as creating a subsidiary, like by creating subsidiary, where we have to be sure that the the commercial bank's activity in the investment banking is not going to affect the financial sector stability and the depositors' safety and soundness. So we are working on these issues, and this is also explained by Dr. Brook. So we are aware about it, and the proclamation is being adjusted or amended accordingly. So regarding my main issue, we are doing our best as capital market and financial institutions cannot be efficient in the absence of stable macroeconomic situation, where the price mechanism is very important to for efficient and effective resource allocation. But as I said, it is a tough job, but we have started just 3 years ago to modernize our system. But as you know, there have been some shocks, both local and external, and yet we are still working on how to modernize our macroeconomic stability, and we have decided to make price stability our priority number one, and the others might be priority number two, like growth might be priority number two. So we are working as much as possible, and gradually we hope that the macroeconomic situation might be conducive for the investment banking and other financial as well as capital market establishment.
Thank you, Dr. Fikadu. So you heard it from the Vice Governor. Inflation is going to come down. This is top priority, and one way or another, the stability of the macro conditions would be vital for a thriving capital market system, and which takes me to Craig, because on your earlier slide you had as a footnote for a thriving capital market system, you were talking about the need for institutions and collaboration. So my question for you, Craig, is, given that investment banking is a relatively new concept in Ethiopia, you've already outlined it earlier, what steps do you think we need to be taken right now to build awareness, understanding amongst the financial sector actors, the potential investors, and the broader public?
That's a great question. I think it's to take the first steps and to generate momentum at the outset. Probably you want to start with the debt markets and enabling companies or local governments to raise money via the debt capital markets. It's the most intuitive, if I can put it that way, the most intellectually intuitive area of finance. People understand it. It's kind of almost a variation of bank lending. It's a flow business, so you can generate multiple transactions, and so that people can develop what I would call the muscle memory of capital raising from the markets. And it is an area in which there is fairly well established international regulation, which the local regulators can look at and adapt for the domestic market. So that's probably where I would start. And then you build on from there. I mean, we all want to talk about IPOs and doing fantastic, franchise M&A. But my advice would probably be to start with the debt capital markets and build from there.
Great answer. Thank you, Greg. I'm going to come back to you, but let me roll that over to Isaac. And Isaac is repeatedly talked about valuation, primed, discounted, and all those challenges. So, Isaac is a man on the ground, based out of Kenya. So Isaac, how do you think the regulatory environment in Ethiopia, you know the environment well, right? You've been in and out, uh, will impact the entry and growth of investment banks. How and what advice would you give to issuers as a global business advisor and potential investors and market participants in navigating this whole new environment?
Thanks for the question. I think you're asking me all the hard questions today. Uh, I think from experience, the key challenge around regulation, and we must have regulation because markets need to operate in with a certain amount of order, is does the regulation actually set the way to play, or do you adjust regulation to fit with the way the market is evolving? I think if we look at issuers, the first thing, as I said, investor education is critical. Understand what is required from a regulatory perspective, understand the rules of play, in particular from a governance perspective. When you're going out to issue public securities, you're actually dealing with the lady down the street who sells fruit at her shop, who's probably invested her life savings in that. So you as an issuer need to recognize that it's not just about your own corporate at the end of the day. There's actually a lot of stakeholders beyond yourself that need to depend on your performance of your company. And the regulation needs to be there to actually support that process. Now, I think when we look at regulators, there are times when they take a hardline stance, and also there are times when they get a lot of flack when things go wrong. But that constant engagement between issuers, between regulators, between intermediaries is critical in ensuring that you still have a fair market and fair play for everyone. So it's an evolving scenario. I think what you see with many markets is there's generally a roadmap that people follow, but there's need for evolution. I have fights with my own regulator about how they want to treat me on certain things, but it's fine. We have the dialogue, we agree on what needs to be amended, and as long as they're seeing that at the end of the day, it's really in the interests of the investors and that investor protection perspective, then I think you can always make it work.
A fight, you both win, right?
Yeah.
So that takes us to Dr. Brook, because you're going to have your own fights in the coming few quarters in 24. So Dr. Brook, listening to what Craig has to say and listening to PwC from their experience, and thinking about having that thriving marketplace, what lessons has the Capital Market Authority learned from other countries that have successfully established a thriving investment banking industry, and how will these lessons be applied in Ethiopia?
Thanks so much. So in terms of lesson, I want to be very cautious. Learning is a good thing by itself, but you're learning from whom is a very important thing. We're not going to learn from how investment banks works from the US or the UK. I mean, this is a very developed market, and we're by far, different context that we have. So we have to go around the region and see, what's happening. And my colleagues and the team have done several research on this. We've reviewed many of the ISCO principles there. The international organization that puts together all security market regulators, and we've reviewed all of that. But ultimately, we know what an investment bank does. We have a very peculiar market in Ethiopia. We have a government that's dedicated to be active in the marketplace through the SOEs and in terms of public investment. Nascent private sector still developing. So our expectation is we're going to walk at the speed of the market. If we're going to introduce a regulation with a billion birr capital requirement, we're not going to have any licensee coming in asking us for a license. That's why we put it at $25 million birr for non-bank affiliated institution that's coming in and asking for this. So in terms of regional market, we've reviewed several markets, but still, even collectively, the region itself, it's represented by very low liquidity. I mean, the Kenyan market, 80% of market cap, I think, is Safaricom. Just one company. I mean, and then the rest of it is very minuscule. That's going to be different for us because we're going to, put on this exchange government bonds. We're going to put exchange municipality bonds, corporate bonds, some of the government-owned, state-owned enterprises. As you know, 10% of Ethio Telecom has already been promised that will be issued for the public, and this will be a perfect venue to do that. So we will grow accordingly, and while we grow, we're going to learn from the market and adopt. But one of the most important thing, our guiding principle when we do our drafting is there is no cookie cutter approach that we're going to use. We're not going to transplant some other countries' working experience and then plaster it and then say, okay, this is a regulation. We're going to create our own. We're going to be creative because it's always easy to correct your mistake if it's your own work. If somebody's borrowed work that you're going to put it as your own, it becomes very difficult. So the long and short of it is we've learned some important concepts from the market throughout the continent. Of course, some regulations that are very advanced, some are still at the nascent stage. But our important message to you in regards to this question is we will have our own structure, our own style. We'll learn through the process and define our own directives that reflect Ethiopian market.
Absolutely. As I wish you all take the silver lining. 10% of Ethio Telecom has been committed. So Dr. Brook earlier said, you don't have to go and grab that expensive empty land, right? Start to save up. Ato Fikadu, perhaps maybe in within our own learning, and you're a seasoned banker, seasoned regulator, you know our environment. So how do you think the banks should prepare to be good investment bankers as well?
Thank you. As I said, investment banking is a bit different from conventional commercial banking. It's a special bank. So, as I said, we are working on how the existing commercial banks are going to participate in the investment banking, like through creating subsidiary, so that we have to be sure that the commercial banking activity and the investment banking activity might not affect each other negatively, so that we have to safeguard the conventional banking soundness and safety and soundness to safeguard the depositor, and also to facilitate their activities in the investment banking. So this is what we are going to do in the revision of the banking business proclamation, where this issue is introduced as a new idea after Capital Market Authority has been established. This has not been there before, but after the capital market has been established, we are going to include how commercial banks are going to participate in the investment banking. So I think we have to maximize and optimize how two more related and different activities are not affecting each other negatively.
Thank you. Thank you, Dr. Fikadu. And this leads me straight to Isaac again, the difficult question. That's what you do, right? Advising businesses. So your next question is, what's the unique economic political landscape, given the unique political landscape of Ethiopia? What factors do you think will be critical in determining success of investment banks operating in the country? And how can investors and other stakeholders best position themselves to take advantage of this opportunity? So this is enormous opportunity in the making. Is the pie is big for everyone. And you heard the Capital Market Authority, you heard the National Bank. What will be your advice for businesses and investment banks out there to prepare themselves for this opportunity? Isaac.
Thanks for that question, Ermias. I think from a policy perspective, the direction is clear. The market is opening up. We're getting the capital markets coming in. It's seen as a key driver for the economy. It's seen as a key driver to drive savings and grow them in this particular market, and offering an alternative to other capital or asset classes that we see in Ethiopia. So for issuers, as I said in my presentation, it's critical for you to start understanding what these markets are about, what's the regulation that's coming in, what is your responsibility as an issuer, what is your responsibility to the investors that would be coming into the market. And I think that type of education to both issuers and investors is critical as we build up to getting the market starting to operate. So whether that's through civic education in different forums, going down to different populations, different towns, villages, helping them understand what is coming and how they can participate. As I said, for Ethiopia, it's a great opportunity because there's an opportunity to actually leapfrog a lot of what has happened in other markets. We were speaking during the break about the old days where if you wanted to buy a share, you needed to fill a form, take it to your broker. The settlement period happens after a week. Maybe after a month, you get a share certificate. With the evolution of technology, with access to mobile phones, it's possible that you could complete trades and get them settled on the same day. So people need to understand that. But the risk of speed as well is that people can actually make mistakes. And that's why the investor education is critical. I'd say for issuers, I think it's clear. You track any index around the world, there's been a gain over years, whether it took 10 years, whether it took 30 years, whether it took more than that. I think they knew that to look at the benefit from and the role that they now play in a greater perspective from an agency perspective to your shareholders and the benefit of actually doing that. But I think critical at the end of the day is people to understand governance. Governance becomes critical from a scrutiny perspective, from a regulatory perspective. And as I mentioned before, with our friends from the accounting board, they'll probably also need to prepare their own the issuers on how to properly financially report going forward.
So Isaac, before you close on that, and without disclosing names and some inside information, how many queries are you handling at the moment?
Yeah, of course, my professional conduct cannot disclose names or who they are, but I think generally we are seeing quite a number of potential issuers asking us, so how would we play in a capital market environment, and should we be going in this direction? My short answer is yes, you should seriously consider going it in this direction, but the challenge will also be to the exchanges when they come to play. If I look at what's happened in some of the markets in the region, when there was a slowdown in issues, when there was a lack of trust in the markets, then issuers went to look for different investors. And that's saw a big growth in private equity in our region. So I think there's going to be competition for different sources of capital. But I think for the capital markets, especially those operating in a regulated exchange, they're probably still going to be in a better position than different sources of capital.
Thank you, Isaac. I think if we're leapfrogging and actually I will say the Ethiopian lions are gagging up to roar, you may have to relocate your base from Nairobi to Addis.
I have no problem. I love the injera and my dorots and other activities as well. Thank you.
Thank you, Isaac. Dr. Brook, my last question, if you allow me to. So given hopefully all this optimism, excitement, you're encouraging all of us to be ready, to prepare, to build capacity, to be aware, etc., etc. So what next steps is the Ethiopian Capital Market Authority taking to attract investment banks to operate in Ethiopia? Maybe not just local, but also potentially foreign. And what are the key challenges the authority anticipates in regulating investment banks, and how will it address these challenges? Dr. Brook.
Thank you. So, in terms of what to expect in investors, so from the domestic point of view first, hopefully, as Vice Governor has said, there is currently an amendment on the table. If that amendment goes through the normal legislative process and the Council of Ministers approves that, and then Parliament enacts that, then we'll have a window of opportunity to allow banks to have a separate subsidiary and then to start operating that. But our message to the banks is it would be really, really shame if that they miss this opportunity and they do not get themselves ready in terms of preparing to be licensed as a capital market service provider. So on the domestic side, we really want to encourage them to make sure that, the RIA, the registered investment advisories, and all the other services that needs to come along with the overall ecosystem. We think the insurance and the banks are the most important components. On the international front, we will do our own, kind of going around and doing our spiel and making sure that people understand what's happening. Of course, there are investment banks that are reaching out to us already, see what are the mechanisms for them to operate in Ethiopia. We highly encourage them until our market gets its opportunity, that's developed and capable. Of course, we're going to rely on external advisors. We do it right now. When we do major transactions, we hire transaction advisors from abroad to help us in government, especially when we do the liberalization or the privatization process. So the same thing would apply, I would imagine, for the time being, where Kenyan investment banks, South African investment banks, and Moroccan investment banks coming in and operating in Ethiopia, and we will help them and support them through that. And in terms of regulation, though, the kind of the basic structure has been defined in terms of how we want an investment bank to operate in Ethiopia. We want them to play that important role of identifying the deal, working through the underwriting process, really getting the companies ready, properly doing the valuation. All of this process, it's a painstaking process, requires a huge amount of commitment from their side. In our view, we're not following a risk-based regulatory approach. We are following a compliance-based regulatory approach. So, for the time being, you comply to be active in this market. We're not going to joke around on people's finances, their investment. We're not going to allow every, Dick and Harry coming in and then floating in, robbing people's money. That's not going to happen. So, compliance. There is no other way around that. In the future, of course, once the market is mature, you can rely on risk-based compliance, risk-based regulatory structure you can establish. But we have experts. That's our main challenge, I think, would be really to attract as many talented people as we can from the market and train them, and then convince as much diaspora Ethiopians who are, for me, wasting their time in New York and just move back to Ethiopia and be involved in this sector. So trying to bring them here and then kind of be part of our amazing journey in terms of creating the Securities Exchange, the Capital Market Authority, and all of that stuff.
Super exciting. How many attendants from banks? Can you stand? Anyone from banks? Anyone from banks? Banks? Okay, don't sit. So, if you understood the message, put your hands up. Thank you, Dr. Brook. That's good. So it will be a shame if banks don't take a note of this. So the line is drawn. So get yourself together.
And it also will be a shame if the first investment banking license that this authority is going to give is not for an Ethiopian bank. So please, for the insurance, for the banks, please make sure you have to get your ducks in order. And this is not a rocket science. Trying to get as many experts as possible, build your own business. It would be a shame after the government has blocked this sector for so many years. Now it's open, and for it's not your fault that the market was closed, that you're not being able to get this license. It would be a shame. So, yeah.